speaking, pop it into the chat. Both Marwa and Medina will be observing that and ensuring that there is answers for that during the Q&A session. So again, thank you very much for joining. We are going to be running you through an introduction to yielders generally, and then more specifically, this webinar is going to deal with the top yielder program, which we're going to discuss in a lot of detail with investors today. And as I've mentioned, the final part of the Q&A will be a Q&A. So starting with who are we? So as you all may know, being investors on our platform, or maybe only users at this point in time, we are the first FCA regulated Islamic fintech platform in the UK. We simplify earning competitive returns from UK real estate in a very simple, accessible and assured manner. So being the first FCA regulated Islamic fintech platform, which was directly authorized by the FCA way back in 2016 now, seems like an awful long time ago. This was a fantastic thing for us back when it happened. You know, adds a great rubber stamp to what we do. You know, we quarterly report to the FCA, and there are audits that happen on the business to ensure that we're always adhering to the gold standards effectively set out by the FCA, the Financial Conduct Authority, the regulators within this country. We now have investors from over 20 different countries. So I will be speaking to you about the timeline of our business, but coming up to about 6 years in business now, and investors from all over the world, which is fantastic for us, and a competitive performance. You know, we've managed to pay out a dividend to investors on the first of every month for the entire time that we have been operational to a business. I think it's sort of 50, 51, 52 months now in a row without failure that we've managed to pay out dividends on the first of every month, both to retail and high net worth investors. So fantastic accolade, and just shows that the business has continued to grow from strength to strength. And then finally, in terms of the competitive performance, so our annualized net returns generally are sat at around 10% per annum. So this is inclusive of the projected net rental income plus the projections that we have in terms of growth in relation to the assets that we do purchase. So that, as a snapshot, really is Yielders as a business, an accessible investment opportunity in relation to real estate. We've really lowered the barriers to entry when it comes to real estate investing and created a very simplified, easy to use and easy to understand process to allow investors to partake in real estate investment. Moving on to our journey. So as I mentioned, business was created back end of 2015, where 2016 we had a beta release to the platform. So this was very much a test case scenario where we designed a very unique secondary market and where we actually submitted our regulatory submission to the FCA. It took a total of almost 24 months, back end of 2017, before we came directly authorized, making us the first Sharia certified fintech of its kind. Within that year, actually, as well, we were presented from Royalty in Dubai the Global Islamic Economy Award for Money and Finance, which was a fantastic accolade, and again, further went to rubber stamping our business and ensuring that people heard about us. 2018, we did a small pre-Series A funding round. This predominantly was to ensure that we could develop our entire tech stack in-house. So we then owned our entire proprietary technology, which is a fantastic accolade for a fintech business such as ourselves. And as we were preparing for Brexit at this time, we actually achieved regulatory status in the Netherlands, Luxembourg and Norway, just as a view to try and circumvent the issues that may come up with Brexit. Last year was a year where we saw a phenomenal amount of growth. We added close to £6 to £7 million in AUM to the platform last year. We scaled up operations, hired a number of people in our team following a very successful Series A funding round, partly of which was done on seeders. So you may have seen our seeders campaign where we overfunded our funding round, which allowed for scale up in operation, scale up in technology, and a complete revamp and relaunch of the platform, which is obviously what you see today. Very easy to use and ensures that investors are able to understand exactly what's going on in a very streamlined and effective manner. And then finally, this year obviously has been impacted, as all businesses, SMEs have been, in relation to COVID. However, we've continued development of the platform, some really exciting things on our technology side happening with Open Banking API, and also expansion of our user base and looking at different elements of our product. In terms of assets added onto the platform this year, obviously the entire supply chain was affected. COVID really has had its way with this year. I think most small to medium-sized businesses would agree. There was a 4-month period whereby the entire supply chain was locked down. So, we couldn't conduct viewings, we couldn't speak to solicitors, because generally transactions in real estate were not happening. There was an interesting article in The Guardian that suggested around £4 billion worth of real estate transactions over the lockdown period were not executed against. So, it's had a massive impact to the business, but also rife for opportunity now, looking at below market value opportunities where we're able to invest in. And then just looking at some key figures at the bottom of the slide that you can see. So close to now 6,000 users. I believe we may have breached the 6,000 mark earlier this month. Just over £7.5 million assets under management as we currently stand. We have a fantastic retention and reinvestment rate with our investor base, so it's up at about 67%. This is generally down to the very low entry point that we've got of £100. People like to test the market with our investment opportunities and then obviously come in and reinvest. Average returns which have been achieved are 6% net yields and sort of a 10% return per annum generally on our projects. And we've currently got 17, given the last asset that we acquired last month. So 17 active investment opportunities, which unfortunately are all sold out. However, this webinar is a way to actually figure out to grow and scale that, which is what we're looking to do. Now, generally speaking, why do people invest? I'm sure there are a number of people who've joined this webinar this evening who already invest or who may not invest now and are looking to do so. The predominant reason behind our asset class of real estate was because it's something that people understand. It's not volatile in nature, as a lot of other investment opportunities tend to be, thinking about stocks and shares. But also it has outperformed most indices in recent years. You look at the steady projection over real estate over the last 30 years, there is an incremental increase over that period, albeit there have been some downturns, but generally it's a safe and secure investment, which has an upwards trend. What our investment opportunity allows for is a passive income, an income that you're able to achieve returns from by not doing anything. Very similar to a savings account, if you would. However, the halal nature of our offering, there is no interest or any traditional financial products associated with what we offer. So you think about current UK interest savings accounts, generally between 1 or 3%. Obviously, we are at all-time low interest rates, so really the savings accounts aren't doing much, whereas our investment rates are benchmarked to around 5 to 7% net per annum, and this is achieved and consistently outperformed. It's a way to obviously allow investors to grow their wealth. You're able to diversify an investment portfolio with a number of different assets on our platform, invest small amounts or large amounts in different types of projects, and earn competitive projected returns across a number of properties. So, diversification and investment in what you would like to invest in, a relatively liquid asset as well. Our secondary market is fantastic in terms of liquidity. So should there ever be a need for you to leave one of our investment opportunities early, the test cases have shown that, generally within that month, you will have all of your money returned to you based on month-end procedures, but actually they sell out relatively quickly. We had some secondary market shares, for example, listed yesterday. I think they sold out within an hour or two. So it is quite liquid and an opportunity as well. And also it gives you the opportunity to compound your return. So, when you create a profile with us, you're designated an entire e-wallet just for yourself. So think of it as an online escrow account almost. Everything is transacted between your e-wallet and the e-wallets that we have for each of our assets. So you're able to, you get all your returns paid into your e-wallet, and you can then reinvest those, compounding your returns and invest them into different investment opportunities. So a really succinct, simple way for you to earn without having to think about your money, effectively allowing your money to work for you rather than just being in a bank sat rotting away effectively. Now, more than just a website, our platform, so albeit what you see on there is, you know, a very nice, shiny piece of work that a lot of effort has gone into building. However, mechanically, there is a lot that goes on in the background of our platform. So you're able to create your profile and invest in one of our opportunities in, you know, a 10 to 15 minute period, sometimes shorter than that if you pass all of our KYC checks. And upload your funds to your wallet. So it's a very simple platform that we've spent years updating. You know, we've gone from sort of 6 monthly, quarterly release cycles. Now we're able to actually, based on the fantastic work our technology team do weekly release cycles. So updates are going on to our platform on an almost weekly basis. You're able to access it anywhere from any iPad, iPhone, laptop, desktop, anywhere in the world. Everything is extremely safe and secure. You're able to invest and look at all of the different investment opportunities we've got, calculate what your returns might look like, interact with the platform as if you would if you're looking at your mobile banking or online banking. You know, you get reports in your profile to understand exactly how things are looking for your investment opportunities. All your data and share certificates and everything in relation to your investment is secure and safe for your profile only. So yeah, we're something that we're hugely proud of. We've won a number of awards in relation to our technology. So not only are we really an investment opportunity, but we are a fintech. That's how we describe ourselves, a financial technology platform. Technology is a huge part of everything that we do. We've got a very streamlined team here at VIELDERS. The focus has very much been on the technology to ensure that we're able to scale and provide a very streamlined service to our investor base. Now, the different types of investors that we have, so you have your everyday retail investor investing from £100, yields of 5 to 7% per annum. And these are the dividends that are paid on a monthly basis into your e-wallets. And more pertinent to today's conversation are the other two types of investors, sophisticated and high net worth. Now, as you create your profile on our platform, you're actually asked to self-certify. And this is whereby you're able to choose which type of investor you are. Now, the type of investor you are opens you up to the different types of deals that we have available at any given time. So sophisticated and high net worth investors get access to the off-market opportunities, both from a development perspective and also a pre-funding perspective, both of which I'm going to talk you through in a lot more detail for some clarity. Now, what this allows for is obviously higher ticket item investment amounts. So as you can see, investing from 25 and from £50,000. The reason behind this is because they are higher risk type investment opportunities, and we're only allowed to effectively accept investment into these if you are someone who's invested previously, someone who understands real estate, someone who understands real estate type investment. So yeah, these are really the predominant differences between our asset classes and what you will be able to see as an investor when you enter our platform. You have to apply to be a sophisticated or high net worth, a top yielder. It's just an additional process whereby we need to understand your source of funds. We need to understand if you have the understanding to be able to invest in these types of things. At the end of the day, you know, the safety and security of our investors is paramount to everything that we do. So we wouldn't allow a retail investor, for example, who may have saved up £25,000 or £50,000, albeit that may be their entire life savings. We wouldn't effectively take on that investment from them unless we were understanding of the fact that they knew the risks associated with what they're doing. You know, there are investment opportunities available for everybody, and there is a risk profile that you must adhere to effectively to be involved in these types of investment opportunities. So without further ado, on to our development opportunities, which are specifically for high net worths or sophisticated investors. So how this works, we carefully vet and identify opportunities with our due diligence processes, which are extensive, more so over the last 12 to 18 months as we've grown as a business and developed our processes and ensured that we take this even more seriously, because there are a lot of investment opportunities out there which don't live up to the bill. We then, in the background, create all of the legal structures and the SPV. So the SPV is a special purpose vehicle. This is effectively just a limited company whereby we acquire our assets through. We then have a network of high net worth and sophisticated investors. So investors similar to yourselves who have created profiles on the platform and have verified accounts. You know, we've checked the proof of funds. We understand that they're able to invest at this level. We will then present these opportunities to investors as off-market deals and say, listen, we have this in the pipeline. This is the amount of money we need to raise. These are the build contracts that we know we can execute on them. And this is the projected exit based on all of the RICS valuations that we get done to ensure that we're able to provide accurate projections on our projects. So at point number 3, we will present these opportunities to investors. We'll have webinars such as this. We'll have conversations with investors. We have investor relations line and investor relations specific mailbox, whereby we'll be able to interact with our investors and answer any questions that we do have or they may have. At point number 4, when we realize now we have all of the funds on account to be able to acquire the asset and we continue to raise funds for the development, we will go to acquire the asset. So we have a number of solicitors firms, not just one, but a couple that we are aligned with that will process and allow for acquisition of our assets at a fairly good pace. Generally, if you think about the real estate acquisition process, if you were to go buy and do it yourself, anywhere between a 6 to 8 week period whereby you have to provide a deposit, potentially more than likely going to have to get a mortgage, and then deal with the solicitors. What VIELDERS does is obviously take all of that effort and hard work away from individual investors and deals with all that ourselves. So rather than needing a financial institution or a traditional financial product to acquire assets, we have a completely equity-based model whereby we use the cash that we have got from this network of high net worth and sophisticated investors, and that will go to acquiring the asset. So we are cash buyers. We're able to move quickly based on our long-standing relationship with solicitors and agents. So we get deals that, you know, generally the day-to-day public aren't going to get access to, and that are really exciting, albeit at times risky investment opportunities that we would manage through to point number 5, which is the completed development. So we would set out a plan with a partnered development firm, ensure that this is accurate and timely, and, you know, assess and manage the build alongside a development partner. We then would look to execute the sale of the development asset or tenant the asset should that be the long-term goal. So we would either acquire and develop the asset knowing we're going to sell it on, or we'll acquire, develop the asset, tenant it, and then you know, people will then enjoy the returns that are available from the fully leased building. Obviously, prior to actually providing this investment opportunity to everybody, we would set out all of these parameters. There are key legal documents which each of the investment opportunities require for you to sign up to before you actually invest with us. Now, bearing that in mind, what we have now on the next 2 slides is actually 2 live development opportunities we have available to us at the moment. Some investors may already recognize this, and we did raise money for these sort of last year, beginning of 2019, effectively. What had happened, unfortunately, we faced one of the most catastrophic things that I think could ever happen in any development project. The original contractor went into administration and actually left us with a build mid-build. This obviously caused a lot of issues, albeit one of the major issues being needing to raise additional funds to be able to actually complete the build, which is why you now see this investment opportunity available to investors again. It's actually, albeit a high-risk investment opportunity, as I previously explained, it's actually quite a lucrative one at the moment as well. Predominantly given the builds are actually around 80% complete. So we've had new contractors on site for the last sort of 6 to 8 weeks, and they've continued development on the sites at a fantastic pace, and they're probably stated about 6 to 8 weeks away from actually completing the development. So really the long stop for completion of these developments is December. They're actually working towards getting that done a lot quicker. By the time these are then completed in December, we would look to have them tenanted. So we are aligned with a local agent who has about 20 or 30 years experience in the area, and they've suggested that we should be able to tenant these properties, even given the current COVID scenario, relatively quickly. As soon as the asset is fully tenanted, we would then look to achieve a sale on this as quickly as possible. So in relation to what you can then see on your screen, what we are projecting is a 15% net return on this in a 12-month period. So as I've just suggested, 12 months is the long stop date. We anticipate to be able to have the development completed by December, allowing us effectively a runway of 9 months to tenant and sell the asset as quickly as possible. We obviously would be looking to do this a lot quicker than 9 months, but just so people are aware, it is a 1-year investment opportunity you'd be tying yourself into. Anything that we would achieve prior to that would obviously be beneficial for everybody involved. So as you can see on your screen, a 15% net ROI on a £50,000 investment is a £57,500 return, and we would be looking to execute on that anywhere between now and 12 months from here. So this is one of the development opportunities that we have. As I said, we've also got indications that it would be producing circa £190,000 per annum in rental income. And the projected GDV, so the projected asset sale value, which we've had 2 valuations done over the last year, is projected to be at 2.1 million. So that is the expected return available from this project. Similarly, and quite close to the project, we also have Albert Terrace. So actually the story behind these 2 development opportunities, we raised funds for Albert Terrace, and it was such a success that we actually decided to do the Park Hotel, which is a similar development a little bit further down the road, shortly afterwards. Unfortunately, the contractor that we had was the same on both sites, which is why we are in the same position with both sites, whereby we now have a new contractor who's working very well to complete the projects. Same return available on this one, a 15% net ROI in a 12-month period. But again, indications are that the development will be complete this year, so by December, which gives us a nice runway to completely tenant and then sell the asset when it's complete next year. This is slightly different. So this is actually assigned as a purpose-built student accommodation. The great thing about this, it is actually the only the second PBSA, so purpose-built student accommodation, in Teesside and close to Teesside University. And actually the agent that we've got who will be tenanting this for us is the preferred supplier to the university. And we have it on good authority, and having spoken to the university ourselves, that there is going to be a larger student induction in January. As I'm sure you're aware, with COVID, there has been issues with students potentially going back to university. But based on what this agent has been telling us and direct conversations with the university, they have suggested that an intake in January will be quite a large one. So we're expecting to be able to tenant this and, complete the development and sell it within that 12-month period as well. So these are the 2 development opportunities that we've got available at the moment, that we are currently fundraising for. So if you have got interest in relation to any of these, please, following this, either get in contact with Investor Relations line, or I think we will be circulating an email off the back of this, which will just outline specifics for anybody to invest should they be interested. Now, actually, one of the most pertinent parts of today's webinar was to discuss our pre-funding opportunities with investors. Now, previously I discussed with you, we've got a network of high net worth individuals and sophisticated investors who fund the acquisition of our deals, which allow us to place them onto the platform. So effectively, they act as our bank, if you will. Now, the process that we follow is very straightforward. We've got a very stringent, strict set of due diligence that each of the assets do go through. So we are inundated on a daily basis with plenty of different investment opportunities, but only very few make it through our due diligence processes. These thresholds that we have are in relation to returns, tenancies, everything that you could imagine. We have a very robust process whereby we assess the viability of any of our opportunities. We then have our team of legal experts who create the limited companies that we acquire the assets via. And this, at point number 3, is really where pre-funding occurs. So we secure the asset through our high net worth investors. So we've got a relatively large database of high net worths, and we present to them all of these deals. And once these high net worths have confirmed that this is what they would like to do, we will collect those funds, and then we will acquire those assets. We will have the rental agreements agreed up front. So these are all generally with tier 1 tenants, so generally with social housing authorities, local councils, or very robust agents who are able to provide minimal void periods, allowing us to maximize the return. So all of this will be done. So the point at which we actually acquire the asset is already an income generating asset. It is placed into a limited company structure. The limited company owns the asset. The high net worths are the shareholders of the limited company, and that asset is producing a return based on the rental agreement that we have agreed. Now, the assets that we're able to acquire are generally below market value, are off market, and have relatively strong growth projections associated with them as well. But the fact that we're buying them under value, buying them in areas whereby we know that there is going to be growth in that area. Everything is financially modeled. We have a model which is underpinned and projected by Savills reports. So we look at all of the growth assumptions that Savills provide and sort of built them into our model, stress tested them to understand. And what we do, we conservatively project returns. We never over-egg them. We'd rather underestimate them and allow them to overachieve rather than overestimate and underachieve. So at point number 5, the asset is completely owned. It is rented out. It is producing an income. And that is the point at which we place it onto the platform for smaller denomination retail investors to come and invest. So your £100 investors coming to purchase an asset which is already owned, completely securely owned, already producing an income with a defined term, 3 to 5 years. And also a conservative projection on the exit. At this point, point number 6 is where everybody then on a monthly basis enjoys their dividends. So as I mentioned, I think at the beginning of this, we've paid out a dividend on the 1st of every single month for, I think, 52 months. I'm going to have to clarify that. It's definitely over 50 months now in a row. So that's a dividend paid to investors every single month without fail, subject to obviously the rental amounts being available to us. So that is a fantastic opportunity that people are involved in and have continued to be involved in throughout our business over the last 5 years. Now, a little bit more in relation to pre-funding and why actually it is a great opportunity. So pre-funding is a new way for people to invest into properties, unique to us at Yielders. As a pre-funding investor, you can have your capital paid back to you whilst earning short-term returns. It's like an interest-free liquid savings account. Now, the mechanism I'm going to talk you through, and we've got some live examples of what we're actually able to offer. So what we're actually able to, in terms of some high-level stuff that you can see on your screen, investment committee approved assets. I've already discussed with you the due diligence that we go through before we acquire an asset. You have the ability to potentially hold 100% of your equity for 1 to 3 months, depending on how long it sells. Just to give you an indication, the last asset that we listed on our platform was £200,000. It sold out in 7 hours. Obviously, the demand is very high at the moment, which we understand. You get a first view of these investment opportunities as a high net worth or a sophisticated investor with us. So we present deals that actually sometimes don't even make it onto the platform because high net worth investors decide to take them up themselves. You have an opportunity for cyclical reinvestment of capital. So if you're able to, following this webinar, say that you'd like to commit £100,000 or £50,000 to our pre-funding, we will be able to present you a pipeline of deals across the next 3 or 4 months that your capital will be recycled into. You have the ability to hold 25% of your equity for the entire investment term. So for example, if we have a £100,000 asset and we have one single high net worth who's going to purchase that asset for us at £100,000, you will have to sell down 75% of your asset. So you can hold £25,000 of your asset, earn the income on it for 5 years and sell when everybody else sells. Or at any point, if you wish to dilute and sell all of your shares, you're able to do that as well. So there's a level of flexibility. We only actually allow 25% of the equity to be held, unless we have pre-arranged or pre-agreed the entire amount to be held for the entire term, which is something that we offer as well. It's very much a bespoke service, and we can almost find assets to align to investors. So dividends and capital are returned on a monthly basis. So back to my example of that £100,000, if we acquire that asset, you decide to keep £25,000 of it for 5 years. After the first month, we would have generally sold out. So £75,000 of your capital will be returned to you for you to either reinvest, recycle, whatever you want to do with it. It allows people to geographically diversify their portfolio. So we've got assets all around the country, and you're able to own a share in properties all over the country, sat from wherever it may be that you are. And then you're also helping the ecosystem. So not only are you benefiting from yourself, from the returns that are on offer, but you're also benefiting the Yielders ecosystem by allowing smaller denomination investors to get involved in real estate opportunities. So again, lowering that barrier to entry for retail investors, which is what we've always tried to do. The ethos of the business predominantly was giving people who don't have access to this type of investment opportunity access to it. So yeah, you're getting involved in something which is benefiting the community and benefiting other investors who may not be able to invest. Now, what we are going to walk you through now is an actual live demonstration of our pipeline that we have for the next quarter. Now, I know there is a lot on screen, so bear with us. I'm going to start with point number one. So all of these houses that you can see, these toy-looking houses, are actual deals that we have in the pipeline at the moment that we are looking to acquire over the next 6 to 8 weeks. Shore Heath, which is available in Stockport, £410,000. Diana Street up in Scunthorpe, £220,000. Chiswick High Road in Chiswick, London, which is an asset at £1 million. And Godstone Road, which is in Croydon at £260,000. Now, what I'm going to walk you through is an example of a high net worth investor saying to us at the end of this call, "Hi Yielders, I'm a top yielder. I have a completed profile. I have £100,000 I would like to invest with Yielders following this call." Now, what we would do, we would take that £100,000 and that would go towards the acquisition of Shore Heath, the acquisition of Diana Street, Chiswick Road and Godstone Road as we complete on these deals, generally probably a month between them or 2 or 3 weeks between them. Now, the first initial £100,000 investment would go towards the deal that we have open and available at this moment in time, which is Shore Heath. We're about to complete on it within the next 7 or 10 days, I believe. It's with the solicitors at the moment. So that £100,000 would go towards that. Now, of that, therefore, that investor owns close to 25% of the entire project. Within that first month, because they are the shareholder of that project, they get paid the 5.23%, which is an annualized net return. Divide that amount by 12 and you would get paid that £435 for the £100,000 that you invested. Now, within that month, the expectation is, as I suggested to you before, we sold out a £200,000 asset in 7 hours. So the view is selling out a £400,000 asset we should do within that month. Now, before we made that live, we've said to this investor, they would like to keep £25,000. So they would hold £25,000 of their shares within Shore Heath for the 5 years. So from month 2 to month 60, which is a 5-year period, they would earn 5.23% on £25,000 each year, on top of the £400 that they've earned in month 1 on their whole investment. At the end of month 1, they are then paid back £75,000 based on the asset selling out, which is what you can see following arrow number 1. That £75,000 is then invested into the next property. They would then receive the income on £75,000 for the first month in its entirety paid into their e-wallet, and they would then hold another 25%, so circa £18,000, which results in a 7.27% net per annum return on that £18,000 for 5 years. So they now have a holding in Shore Heath of £25,000 and a holding of £18,000 in Diana Street for 5 years. So that's continuously monthly income that you're getting paid that you can forget about and let accumulate in your e-wallet. Now, following Diana Street selling out, less the 25% which has been held, so less the £18,000, we would then use the £56,000 to go and acquire a portion of Chiswick High Road. So the investor would then get paid a return on that total amount for month 1, and then choose to retain 25% of the £56,000, which is approximately £14,000, and they would then earn a 4.48% yield on that £14,000 for the next 58 months. And then finally, the total amount they would have left to invest in Godstone Road, which is our final investment of this pipeline, of this Q4 pipeline, £42,000 goes into that as an investment. They would earn the total amount on return for month 1, and then a 4.2% net return for the next 58 months. on the £10,000 they decide to reinvest. Now, this cycle could take anywhere between 1 to 3 months. Now, the table that you can see in the corner, at the end of that 3-month period, we would return to you £31,000, which is the capital which did not stay invested. The 4-month return on the 100K, so each of the individual returns that you earn on a monthly basis amount to £1,850. You have a retained investment amount of your £100,000 of £68,000 and an average annualized return of 5.56% on that £68,000, which is approximately £3,800. Now, on the retained investment over the 5 years, your actual cash return is a £19,000 on the on the retained amount of investment. So you have £68,000 invested over a 5-year period. You're going to earn £19,000 effectively on top of the 4-month return on the 100K. Now, I know that is obviously a lot of information to take on, and there is a lot going on screen. Obviously, we will be circulating this webinar, both the recording as well as the slides to investors. But this gives you a visual idea of what we actively have in the pipeline at the moment, what you could allow your investment and your money to be invested in, geographical diversity in terms of assets in London, assets up north, assets in the Midlands, and allows you to have a liquid investment portfolio effectively with us. I hope that wasn't too complicated, but more than happy to answer questions during the Q&A. In terms of what this means, so geographically, as I said, the diversity available, 4 investment opportunities in the pipeline that you can invest in. We have the investment committee with over 50 years collective experience in terms of real estate, accounting and legal experience, coming up to 5 years of full operation, providing pre-funding and opportunities like this to investors all over the world. Based on the initial 4-month return, so on the larger amounts, a quick return, so a very liquid opportunity to invest in, and then the projected annualized net return of around 6%, which is our target yield. Obviously, you would have noticed that up north there was a 7% net return. In London there's a 4% net return. That's generally based on the asset prices. Obviously in London yields aren't as high, but that's due to the nature of the asset being so much higher in value. Now, what does this actually look like in comparison to other products that you have on the market? What you see in front of you are a mix of savings accounts, builders accounts, a REIT. So Goldman Sachs Marcus, that is a fixed term savings account. Ariane's savings account, which offers a 0.9% per annum return. Brick Lane Sharia Residential, a REIT, so a similar business to ours, but it's a listed real estate investment trust at 3.3%. The NatWest Savers Building Account at 0.75%, and the UBL UK Islamic Notice Account at 1% per annum, which requires a 90-day notice. Now, you see us at the top as a pre-funding facility with what I've just walked you through. That is providing you a 5.56 net return per annum. Liquidity available within 30 days. We've earmarked that because obviously that depends on the secondary market. But as I've said to you, our secondary market is extremely liquid. We sell out of assets on there so quickly. So I don't think liquidity is too much of an issue should you ever need to come out of your investment opportunity. Obviously, one caveat that we have to state is the likes of Ariane, Goldman Sachs and NatWest are banks. So they are covered by FSCS, which is a deposit protection scheme. We are not a bank, so we're not covered by that. However, we circumvent that and mitigate against that by you being shareholders in the business which owns the asset. So regardless of whatever was to happen to Yielders, each of the SPVs is governed by itself. It is owned, and the shareholders are for everybody to see, available on Companies House. We submit annual confirmation statements and annual accounts. So even if Yielders, for whatever reason, never existed anymore, the asset structures are standalone and not impacted by our performance as a business. So, they would continue to be administered throughout the life cycle of its investment term. So this really just gives you an indication how we compare ourselves to other market opportunities that are available at the moment. And as you can see, not trying to blow our own trumpet, but the net returns that we're able to achieve far outweigh deposit savings accounts that are currently available in the market. And obviously, the majority of which do not align to the Islamic finance nature of our business, the Sharia element of our business, and the ethical nature of our business to provide transparent net returns to our investors. And finally, I think that the last point that I wanted to touch upon, our pledges when we open up our investment opportunities to people. So ethically minded investment opportunities in UK real estate, fully authorized by the FCA, assets which are completely free from debt, leverage, or any financial product, rental income, which is paid as dividends to your e-wallet on the 1st of every month. Automatically, you'll get an email wherever you may be in the world to say your rental is available in your e-wallet. No hidden fees or charges. All of our fees and charges are available on each of our investment opportunities. We've got a profit and loss financial summary and a statement for each of the investment opportunities, so you know exactly what we're earning from every deal, what yourselves are earning from every deal, if there's any finder's fees, what our legal fees are, etc., etc. As I've already touched upon, a diversified selection of properties which are continuously added to the platform. A friendly and attentive team on the end of a line. As I've already mentioned, we've got the automated chatbot on our platform. We've got investor relations and a fantastic team who are always on hand to answer questions and help anybody throughout their process with us. And clear, open and honest communication about who we are and what we do. That is the very ethos of our business. From the very beginning, we made a decision that we weren't going to be a Sharia compliant business. The view was to create an Islamic finance friendly business from the very core. We align ourselves to and define ourselves as Sharia based. 3 very simple principles that allow us and have, we've been audited from a Sharia board perspective as well. Obviously, no interest or any debt with any of our products, investing into an asset class which is not volatile and people understand. So, real estate. And finally, complete transparency on everything that we do. Honesty and openness with our investor base is key and has been key to the success of this business. That is it in terms of the slideshow presentation. Appreciate I've been talking for some time now. I hope it's not too much and it was quite succinct. I noticed we have had a number of questions on the chat. And I think I'm probably just going to scroll through to the top and start running through them. So question number 1. Salam, really interesting so far. I just had a question on the wider impact of the investments you choose. Do you look at social environmental benefits of the projects, easy social housing elements of a development, or carbon zero developments? How does this factor into your decision making? I think there is an element of this, of course. The development projects that we had created and are involved and I presented to earlier, that was a point in time where, that wasn't the focus. It was very much a very lucrative opportunity to invest in. However, going forward and since then, it's definitely something that we look at. All of our, I'd say about 90% of our assets that you see on the platform have an impact on social good. So they are with tier 1 tenancies, so agents that deal with social housing or local authorities which need housing to be able to place. So we're helping with the housing shortage, not only in London, but further afield, and providing social housing for people that do require it. So going forward, we've developed and thought about products and looking at ESG and further impact in how we can improve that element of what we do. So definitely something that we are thinking about and intend to further as well. The next one, great question. One question from my end: how long does on average step 1 to 5 take? So we very much have streamlined the opportunity. The hardest thing of what we do at this moment in time is actually the due diligence. We're extremely diligent in terms of the work that goes into assessing whether or not an asset can come onto our platform or not. That generally takes anywhere between 1 to 2 weeks. Once the investment committee has approved an asset for acquisition, we tend to try and complete on an asset within a 4-week period, which is very streamlined. You know, we've got our solicitors that work with us that are able to do the checks relatively quickly and complete on properties. And the fact that we're cash buyers obviously really helps our situation as well. So once we present assets to investors and we believe that there is enough interest, we'd probably say a 4-week period at that point in order to be able to acquire assets. What kind of due diligence do you undertake in selecting and appointing a contractor for construction works? Thanks. Obviously, since the administration of the previous contractor, we have gone to far more extra lengths in order to ensure that we're able to have a contractor who is able to complete the works and wouldn't get into any financial mess. So the second round, sort of finding a developer and a contractor to take on, extensive due diligence went on, you know, an enhanced due diligence questionnaire went out. We sought, even looked at their accounts to understand their financial viability, sought references from previous works that had been completed, and also recommendations as well was something that we looked at. So a very extensive view. The second time round, obviously, mistakes made and lessons learned from the first time round, and we've ensured that the new developers, you know, are fantastic. They've been working extremely hard, and also ensuring the governance around the development projects is a lot more tighter and a lot more scrutinized. Next question, the 2 deals you mentioned, Park Hotel, Albert Terrace, they say minimum 50K, but if we're coming in as a sophisticated investor, can we invest with 25K? We do treat each of these investment opportunities and investors singularly. So we will have a conversation with you. You know, we'll discuss your wants and your needs as an investor. And if following that conversation, we feel that, you know, it's an acceptable investment opportunity, then yeah, we've not said no to £25,000 before. However, given the timelines we face now, a minimum of £50,000 is what we are looking for. Going forward, you know, there is flexibility on that, but at this moment in time, based on where we're at and the severity effectively of which we need to raise the money to be able to complete the projects, we're looking at a minimum ticket item of £50,000 at this moment in time. The slide stated a 15% return in a year, but the website states just over 10%. Which slide were you referring to? Specifically, projected returns that we offer on retail products are 10%. So that is 6% per annum plus a average of around 3 to 4% net growth based on where we've bought and how much we've bought. The 15% ROI was actually for the development project. So that is a project that we have assigned a 15% net ROI. So again, you know, mentioned it may be high risk, but it's a very lucrative opportunity that we've got available at the moment with potentially very, very short term lines. So as I suggested, we should be complete with that development by December. And that would allow us a clear run in the new year to tenant it and sell it. So, you know, if there is interest in that, you know, we're happy to pick up these conversations following this webinar. Okay, so just on to the next question. Also, what is the proportion of type of investments, e.g. how much is residential, commercial, etc.? There is a good mix. I'd say it's generally heavily weighted towards residential, probably about 80-20. A couple of the new assets in the pipeline are commercial. So yeah, it varies. It just depends on really what is available in the pipeline at any given time and what passes the due diligence processes from our end effectively. Next question, on step number 2, creating an SPV, why have you moved away from the UK model articles of association? We haven't. So each of the SPVs has an information memorandum and articles of association with it. These 2 documents are the 2 key legal elements. The information memorandum is effectively like a business plan. So it outlines all of the costs associated with the asset, what the projected returns are, what the expected exit terms are, and all of the expected outcomes effectively. And the articles of association underpin that and is the governance effectively of the SPV. Next question, what if I wanted to hold on to my shares of the asset after 12 months? That's absolutely fine. It's entirely up to you. As I previously stated, 25% of your holding you can hold for the entire 3 or 5 years. Or if you want to sell down, if you're specifically referring to the development projects I've outlined, the view for those is to get them built, let and sold as quickly as possible. There is the possibility that we may be even selling them down onto the platform, which would allow you to hold your shares for longer than the 12 months. The exit, of course, will be decided upon completion of the build and subject to any offers that we have on the open market. Dividends paid first of every month at the initial agreed rates or revised rates, taking into account the recent market. Great question. For the first time, we had I think probably 4 or 5 of our listings that were adversely affected across the COVID period. We were receiving some rental income in some cases, in other cases, none at all. But we continued to pay dividends out, even if it wasn't the total amount. We are very clear in our communications to investors. So should there be reduced dividends, you will know before you actually receive them. Again, anything that we're trying to do in relation to chasing arrears and trying to balance the books after what COVID has happened, everybody is aware of as well. So albeit we continue to pay out on the first of every month over the COVID period, there was obviously difficulties, I think felt globally, not just over here in the UK. So there was a reduction in dividends. What we do at the end of every investment opportunity, we also provide an exit report, which shows the performance of the asset. You're able to see the performance of the asset within your own profile. So your own profile acts as if, it's like a bank account effectively. You can see your incomings, your outgoings, what the returns have been, et cetera, et cetera. So you're always on top of what you are receiving rather than being surprised at what's come in. Is there a way to find out when a new property has been added to the site? So you should have been, if you are already a user, you will be automatically added to our email database. As soon as an asset is available, we send out a comms in relation to that. So if you're signed up to the platform, you would get that. If you are a high net worth or following this, you want to apply to become a top yielder, you get access to off-market deals. So we will be in constant contact with you, providing you all of these off-market deals and waiting for people to fill up the investment. What would be a possible risk of pre-funding example? That's another great question. I think what we have created as a mechanism and as a process is a relatively de-risked investment opportunity. We create and we look for things that we know people are looking to acquire, and that are strong enough in terms of a return, both from a yield perspective and a projected perspective in terms of capital. Now, the only real risks that stand out is if you were to say, for example, it's a £400,000 property and you decide you want to invest £200,000, you obviously want to do that, and we're unable to raise the other £200. Now, we wouldn't use your money until we have all of the money on account to obviously send to solicitors and complete. So we mitigate against that risk of only completing when we have all of the funds. So the potential risk there is that we wouldn't complete and, we'd have to find another opportunity. The only other risk I perceive really with pre-funding is there not being enough demand on the platform. So once we acquire and you want to sell down your shares, you have to have enough investors wanting to buy your shares effectively. That's how it works. Now, the only indication that I have of that, as I previously mentioned, the last asset we listed on the platform, which was early August, mid-August maybe, £200,000, it sold out in 7 hours. So right now, demand is rife. So I don't actually envisage that being a risk. However, we may get to a point where we may not have enough retail investors to purchase your shares. However, really, I don't envisage that happening. And even if that is the case, you are still continuing to earn an income. It's an income generating asset. So you're not actually ever losing out. It just maybe take some time to sell down. However, indications show that, we don't have enough product. We're trying to have a webinar like this and increase our database to actually provide more product. Next question. Investors may think they have to invest in all of the Q4 pipeline investments. You may wish to make it clear that they can opt to invest in one or more investments, no obligations to invest in 4. Absolutely. There is no obligation to invest in any of these. I'm not saying, we'll take that £100,000 and we will recycle it for you. It is a bespoke opportunity. We presented that as the 4 that we've got available in the moment, just to show you what a £100,000 investment would look like with us over the next few months. If you want to invest in one of those opportunities, absolutely fine. If you want to invest in 2 of them, if you want to invest in 4 of them, it's entirely up to you. The beauty of what we have created, the investment decision making, is on investors. We are only here to create the deals, provide the deals, and walk you through the deals. We don't actually advise on what you should do. Realistically, you make that decision based on your own due diligence and understanding of what we have on offer. Next question: who will it be administered by should you go bust? So we have an accounting firm who are the same for each of the SPVs, and within the Articles of Association, it states that should Yielders go bust, the administration of each of the SPVs will be continued by our accounting firm. It would probably slow down and be a bit more difficult for them, but they would continue the administration, ensure dividends are paid, accounts are done, etc., etc. Has the pandemic impacted your vision for the business? Of course. I mean, I think the expectation of this year, following last year, we had a huge amount of growth last year, and we're really, really looking forward to this year before we had the brakes slammed on, as I think everybody did. It's been a complete shock to the system. And honestly, it's been about survival more than anything. I think a business that can survive a global recession, which is definitely where we're heading, if not already there, shows that there is definitely something available and on offer. So, we had huge things planned for this year in terms of reach, growth, revenue levels that have just been completely missed because of what has happened. We've had to completely reconfigure and realign ourselves, but, testing times for everybody. So I think it's just a view of taking heed, understanding where we need to go. Luckily enough, as I mentioned previously, the team is extremely lean. We've invested heavily into the technology, so we're not hugely impacted by having to pay wages, etc. But the whole team has felt it. It's not been the sort of year we wanted. We wanted to see another year of exponential growth as we did last year, but it's very much been batten down the hatches, survive this year, and look for sort of better year next year, and the start of that really being Q4 here, and trying to start off where we left 2019 really. Next question: currently some of the assets in the Teesside area are not providing a good return. Are you confident that the 2 large projects you mentioned that are already on your platform will rent out easily? I've noticed a lot of landlords selling properties around universities recently. Again, a great question. Obviously, yes, we were adversely affected by people not being able to pay rent in these areas. So it's something that we have looked at. We've shifted managing agent away from the old managing agent because they weren't able to fulfill their duties. So it's something that we've looked at extremely carefully. Now, the 2 projects available up north in Teesside, one of them is a single dwelling. So for young professionals, that we have an indication, almost a waiting list from the local agent of people that they believe that they'll be able to get this tenanted to very quickly. There is a massive need and a growing need of single new bedroom dwellings for young professionals in the area. So with the Park Hotel development, we're quietly confident that we should be able to get this tenanted, no problems. Actually, what we're hoping for, the decorators are due next week. So once the top floor is completed in terms of painted and fully complete, we're going to be taking the agent to site to actually start kicking off the tenanting process as early as middle of October. So that's fantastic news. The purpose-built student accommodation, so the Albert Terrace development, of course, we're keeping our ear close to the ground with the local university and understanding what is happening, but also we have an indication that there will be increased student numbers in January, so we can only progress on that behalf. We're also exploring alternative tenancies within the purpose-built student accommodation and working with the local council to see if we can change the permissions of planning to allow for different types of tenants. So it's positive, albeit understanding that there is negativity surrounding the student market at the moment. But another indication, the phase 1 of the Albert Terrace development is, I got word of 80% filled with students starting at the beginning of October. So yeah, we can keep people up to date on that and continue to provide the information. You stated that you are not a bank. Could you explain the e-wallet and escrow account, which bank backs it, etc.? So it's not actually technically a bank that backs it. It's an escrow provider, a company called MangoPay. They were integrated via API with our platform from 2015, ever since we created it. Effectively, it's an extra layer of security for us. You have to create a profile on there, albeit you don't see the profile being created because we've created such a streamlined onboarding process that you only onboard once. But you go through security checks for them. You are then assigned a e-wallet, which is dedicated to your profile and only accessible by your profile. We then assign your designated bank account to it, so you can add funds or remove funds to that singular bank account that we have verified. So it's an e-wallet provider. It's not a bank. All of our FCA permissions are available for people to see, but we do not have client money handling permissions because actually, technically, we don't ever touch your money. You invest it, it goes between escrow account to escrow account. So yeah, a very streamlined process that we don't have the extra regulatory burden of a bank. Do you have any plans for funds that sit in the e-wallet for considerable time between property releases? Yes, in short, we are working extremely hard at the moment with a new product that potentially could be available early next year. I can't give away too much at the moment, but it would allow for relative ease of investment and just, low risk short-term returns, which are quite liquid available and could potentially also be ISA and SIP available as well. It's something that we're working on, and we should be able to provide more information on that as we progress with it. Can you provide information on how we can provide proof of funds if your funds are abroad? We accept proof of funds pretty straightforwardly. We ask for 3 to 6 months worth of bank statements, whereby compliance team reviews it and asks any questions. But all we need is 3 to 6 months worth of bank statements from the bank account that you're looking to invest, which obviously with the higher ticket items need to be a UK-based bank account. So yeah, that's how we check our proof of funds. So if you do and you want to become a top yielder, this will be one of the main steps that is required for you to come on board. Next question. Assalamu from Park Hotel and Albert Terrace. In your expected figures, are you taking into account any low demand in the property market given the pandemic? Low demand in terms of what? I'm not exactly sure. Low demand in terms of rental income. So we've got a conservative projection of around about a 6% net yield when it's completely tenanted. Obviously, the level of tenancy impacts the valuation at the end. But as I've previously stated, the expectation is we should be able to get these tenanted. We've got a local agent who has been there for a number of years, that knows the market very well, has a waiting list for these types of dwellings. So we will be able to provide further clarity on that as and when more of the development is completed and we can conduct viewings. What plans in the upcoming months do you have for low net worth individuals? So all of the deals that you saw on this particular page when I was running through them will make it onto the platform for retail investors. So each of these will become available for investors on the retail platform for you to invest in smaller denominations. It's just a process that we have to go through. The top yielders, which this webinar really was directed at, was to ensure that we could fund these that would then allow them to come onto the platform. So that's really the view. So look out for those deals because inshallah they'll be available on the platform over the coming months. Hi, will you be offering an ISA investment route anytime soon? Inshallah, it's something that's in the works, something that we're hugely excited about. We've had a number of investors who always queried and asked us about this. We did submit an application to HMRC to provide an equity version of this. However, given the interest rigged financial system that we find ourselves in, there isn't such a thing. And generally they're quite risk averse with these things. So it's something that we're working on, and it will be something that we progress with. Sure, Mr. Ashraf, I'd like to invest. Please, can we speak after the session? More than happy to reach out to you following this. Can you expand on any pressures you faced in the secondary market on properties which haven't performed well? Most of your conventional peers have faced issues in this, e.g. people want to sell, but there are no buyers as the property isn't doing well. You know what, alhamdulillah, it's been the exact opposite for us. We have a bright red warning on 2 or 3 of our assets stating that they are currently going through issues with rental income. We've not been able to receive complete rent, or the dividends are slightly lower, yet the asset seems to have sold out on our secondary market. Risk warnings are very much a part of everything that we do. However, we do understand we've put a small pause on secondary market transactions for a few of these assets because we don't want people buying assets that aren't producing an income. So we have restricted people selling them for this month only. It's the first time we've ever done it, just as we sort out the change of management. However, people continue to purchase shares on our secondary market, and it's extremely liquid. It is the biggest inherent risk when we think of crowdfunding and real estate investing. But alhamdulillah, from our perspective, it's extremely liquid and has continued to be so. Assalamu for Park Hotel and Albert Terrace, in your expected figures, are you taking to, I've already answered that one, sorry. Is there a limit to how much I can invest? And can you please run through an example of an investment? As a high net worth, there is no limit to how much you can invest, as long as you're able to prove your proof of funds, as long as we're able to verify the source of your funds, there is no limit to what you can invest. So if you have a few £1,000,000 sat in the bank account that is earning you nothing, we're more than happy to work with you to place these funds and look for bespoke opportunities that might work for you. In terms of running you through an example of an investment, I think this slide did do that quite well, in terms of if we were to look to acquire Shaw Heath, so we would pay £410,000, we'd collect that amount, it produces a 5.23 net return per annum. So you would get paid £1,300 on £100,000 a year if you were to invest £100,000. If you decide to keep that £100,000 invested, then you'd earn that for the entirety of the 5 years. We then, at the end of the investment opportunity, have the asset revalued. Based on our conservative projections, we expect the asset to increase in value, so you would then get a share. So your £100,000 might go to £110,000 based on the projections. Great and simple explanation and broad idea. Thank you very much. What is your current expected ROI for first round investors into development projects? ROI for first round. Unfortunately, with the first round investors, they have been negatively impacted by what has happened. The reason for us raising these additional funds is to ensure that we minimize any losses to round one investors. So, as I mentioned before, that was predominantly brought around by what happened, the contractor going into administration. So we are working towards ensuring minimal impact to investors' capital. We can't give a definitive answer yet because it depends on what the asset sells for, but we are hoping to minimize any losses that may have been incurred by round one investors. Can you expand on any pressures you face? I'll answer that one. I've noticed some of your projects have quite a high finder's fee. This is then added to the overall costs. Will this also be the case with the planned assets? You have recently introduced an additional 0.5% fee to cover some costs. So actually, some of the finder's fees that we've previously had was something that we've looked to revise. We worked on a deal flow partner basis a lot of the time previously, which ensured that there were finder's fee. We've now enhanced the team to actually start and look for properties ourselves rather than partner with people to provide them. So we've got a lot more in terms of access to agents and off-market opportunities where finder's fees are minimal and to the percent rather than deal flow partners where they tend to be excessive. So it's something that we've looked at and obviously have improved in terms of our process. And yes, the additional fee that we recently circulated was a fee for our e-wallet. So that's not a revenue generator at all. It's just a fee that we have received from our e-wallet provider, which has obviously then been passed on to investors. Will you be sending us the presentation recording? Yes, of course, we'll make it available for everybody and send that out. what will happen to the current development assets if they are not completely funded? Obviously, this would be the worst case scenario, and we would have to look at distressed sale options. We have also looked at potential Sharia compliant financing options. So we are exploring absolutely every option in relation to fundraising around these projects now. The last thing that we'd ever want is a distressed sale. But what these projects have definitely taught us is, if you think about investing in development projects with traditional financial institutions, if something like this was to happen and they were to go wrong, there would be a distress sale. There would be no transparent communication. There would be no back and forth with investors to find out the best way to get around this. They would sell the asset and recoup as much money as possible. What we have decided to do, and what we will continue to do, is work with our investors to provide a solution. Even though the worst thing that could have happened has happened, we are still working extremely hard to turn it around and make sure that these developments get finished, allow round one investors to recover any potential losses with rental income, give them access to liquidate via the platform. But ultimately, we are looking to complete these developments as quickly as possible and get them sold. Completely appreciate that, not everything goes right and as expected the first time round. But yeah, a lot of work and a lot of effort has gone into lessons learned, to reassessing our due diligence processes and understanding what needs to be done to complete these projects in a very tight timeline and a streamlined manner. So what you actually see available to yourselves now as an investment opportunity is, it's hugely lucrative. It's a short time scale. It is high risk, which is why we're only presenting this to people we believe can have the ability to afford it or align to those risk profiles. But it is a lucrative opportunity that we have had substantial uptake on over the last few days. How many assets done that have completed a full 5-year cycle in terms of capital appreciation? So one example, Gravesend, which was the first asset that we ever had. We'd originally projected 34% net ROI. That achieved a 55% net ROI over a 3-year term. So we massively overachieved in relation to that. The great thing about our platform is flexibility. That was a great deal that we acquired first. Fantastic returns for investors. The second one that we were due to sell earlier this year was in Milton Keynes. That was due to sell, and literally as we were going to market with it, COVID happened. So rather than ensuring people would suffer a loss, because if we were to sell it at that point, there would be a reduced value, so people would suffer a loss, we found a new tenant, re-leased it for another year to ensure people could continue to earn a rental income. There was a little bit of a void period, I think 2 or 3 months, whereby we were trying to find a new tenant and deciding what to do. We replaced the tenant, so it's now tenanted again, and we will look to sell that next year. So, this is another great element of our platform and our process, that if we reach the end of an investment term and we hit what we hit, which was a completely unexpected global pandemic that sent the world upside down, we are under no pressure to sell. It's our decision. By our, I mean all of the shareholders' decision to decide. So we put this to investors. Investors voted on what they would like to do. The vote was that investors wanted to keep the investment opportunity, reapply a lease agreement, extend it for a year, and look to sell it next year. So that way we were able to avoid any losses for investors, unless, of course, they wanted to sell their shares because they needed their investment back, which some people then went on to do in the secondary market. Our third investment opportunity, which is reaching full life cycle up in Nuneaton, is due to be sold in April next year. So we've just had a 6-month notification come in that, so we'll soon be getting that valued, ready to be sold. They were the first 3 assets that got listed in 2015 and 16 respectively. So one fantastic opportunity which completely outperformed everything that we'd ever anticipated and was a great proof of concept. The second one, another fantastic proof of concept, whereby we were hit with a global pandemic, unable to sell, and rather than allowing people to suffer losses, actually continued to allow them to earn, which is, again, fantastic proof of concept for our platform and what we're able to achieve. Is there a risk that I could lose my investment? In short, no. We are, as in the SPV is the owner of the asset, and you are a shareholder, a shareholder of that asset. that is verified confirmation statement sent to HMRC and Companies House. You are listed as a shareholder within that, so your shares are yours. The only thing that could happen is obviously the asset could decrease in value and we could be in a position where we have to sell. But as I've just explained to you with an asset that we had in Milton Keynes, that exact thing did happen. And rather than selling, we've reapplied the lease agreement and it's still earning an income for everybody. So actually, for you to lose your investment with us is extremely difficult. As long as we've got a tenant within the asset, you will continue to earn an income. The most that might happen is that there will be a void period where you're not earning anything on your money. So you're not actually losing anything, you're just not earning a return. That is the worst case scenario. The only worst case scenario I can think of is if we get to end of an investment term and people want their capital back, even at a loss, we will be subject to selling at a loss should investors vote for that. But again, the decision-making is entirely in investors' hands. So really, from a perspective of risk, we've done everything that we can to mitigate any risk. It's a very, especially for retail investors, the investors that invest on our platform, the asset is owned, it's producing an income, so it's de-risked as much as possible. High net worth investors obviously are inherently riskier investors. That's why they get subject to higher returns with the development projects, with pre-funding. There are slightly more risks associated with them, but again, de-risked and mitigated against from the perspective of that is the due diligence process that we go through to ensure there is no risk effectively. But as with everything, we write on all of our marketing material, on any material that you may see from us, capital at risk, because it was always at risk. Regardless of what might happen, regardless of what I could tell you, there is a risk. Whatever might happen to the building, it might get swallowed up. There might be a global pandemic. There is always a risk, but we do everything we can to mitigate those risks. So in pre-funded assets, the profit comes from the rental income of the first month only if I choose to sell all of my shares when it goes to retail investors. Correct. If you decide to sell all of your shares, so £100,000 investor, the asset's worth £200,000, you give us that £100,000 at the end of the month, we probably would have sold out. So you get your £100,000 back plus whatever you've earned in that month. You can then decide to give us that £100,000 back and put it in another property and so on and so forth as per the pipeline. But yeah, effectively, if you decide to have all of your income back, we'll probably sell it out in a month. So you'll get all your capital back plus whatever you would have earned in that month in terms of a dividend, which will be if it's a £100,000 asset and you invest £100,000, you get all the rental income in that month. If it's a £200,000 asset and you invest £100,000, you get half the rental income of that month, and so on and so forth. Okay, I think I've reached the end of, oh, no, there's another one. We are interested in invested, however, funds are currently abroad. We have already invested over a certain amount on your website. We would be interested in investing 25,000 sophisticated to begin with, but it may take a month to send the money across to the UK. That's absolutely fine. We must take the funds from a UK bank account predominantly based on the fact that security checks. So when we do send money to e-wallets or to the platform, it is obviously checked, which is something that we cannot avoid. So the preference is it always comes from a UK bank account. So if it's going to take you a month or 3 months to get that done, we will continue to provide investment opportunities. If you're signed up as a top yielder, then you'll continue to receive these off-market opportunities. Pre-funding provides 5 to 7% per annum, and also retail investors expect 5 to 7% on investments starting from £100. What is the additional benefit for high net worth investments? So for me, I think the benefits really are what you can see on the screen now. You're able to diversify your risk. You can invest in a number of different properties. You can recycle your capital. It's extremely liquid. So if you need for 1 month to another to liquidate your holding, you can sell it down and get all your capital back. It's a way for you to let your money work for you without you having to do anything. You're getting paid these returns on a monthly basis without lifting a finger. Whereas if you've got your money sat in a bank, which a lot of people do, or you've got your cash sat in under your bed or under your mattress, that money is not working for you. It's losing value. Inflation reduces the value of that money. So, you might as well put it into a mechanism where you're earning something from it and allow that return to compound and increase the value of your money rather than it wasting away. Or, you know, if you do have money in an interest saving bank account, if that doesn't match your ethical and Sharia principles, there's an alternative with us. If it doesn't match your ethical principles and you don't want to work with traditional financial institutions, this is a fantastic opportunity for you to earn 5 to 7% net. You know, that is a fantastic amount. You know, previously we showed you what other savings account and what other banks and financial opportunities offer you. You know, these are sub 1% returns. We're offering you 5 times that. You know, historically achieved 5% net returns per annum. So, yeah, I think that answers that question. Are pre-funding accounts open to all investors? No. So pre-funding is available if you qualify as a top yielder. So you're either a sophisticated or a high net worth investor who has spoken to one of the senior team at Yielders who verified that you have the ability to invest. And we also need to do a proof of funds check. So following this webinar, we will be sending out an email aligning to people's interests, so you can, you know, accept interest on whether you're interested in becoming a top yielder. We'll help you through the application. We'll also be submitting an email for you to send through what your investment levels are like, so we get a better indication. And then the team will be on hand to work with whoever wants to become a top yielder and work them through that process. The retail investor can also diversify and liquidate in the same manner. What I think would be more appealing to high net worth are the development opportunities rather than pre-funding for investments to be added to the platform. Of course, we want to add, effectively, the view of the business is to become a one-stop shop for real estate investment. So that is pre-funding, that is development projects, the whole shebang. What I alluded to before with pre-funding, you know, you're not only doing yourselves a sense of justice by having a diversified portfolio, you know, decent amount of investment in all different opportunities right across the UK, but you're also help facilitating an ecosystem. You're benefiting us as a business because, you know, we have more liquidity to go and buy more products to be able to place on the platform for more investors. So not only are you doing good for your own financial benefit, you're also doing beneficial things for an ecosystem and growing our community to provide equity-based investment opportunities, you know, a move away from traditional finance, a move away from an interest-based system that is geared up and leveraged to the hilt. You know, this is a purely based equity investment opportunity. So not only are you helping yourself, you're also helping, you know, a community, an ethical and Islamic investor base. When will pre-funding accounts be available? They're available as we speak. So as soon as you verify your profile with us, provide us proof of funds, and we have a chat with you, we can start presenting pre-funding opportunities to you from tomorrow. Okay, I'm just conscious of time. We've sort of hit an hour and a half almost, and however much I do love the sound of my own voice, I'm sure people would like to get to their evenings. So thank you very much all for your time this evening. Really appreciate taking the time out to listen to what we've got to say. As I've said, the team will be circulating some emails following this webinar, just outlining both the recording, the slides, and also an email to understand your interests and level of liquidity available should you want to come on board. As I stated, there are some really exciting investment opportunities, both from a development and a pipeline perspective. So please register your interest if you are interested as soon as possible. The team across the next day will be on hand to answer any queries, speak to you directly if you want to have more tailored experiences. But that is all for me. Thank you so much all for your time. Have a great evening. Assalamu alaikum, and thank you again.